Good morning. This is Dennis Wilson with the Active Trend Traders. Mike Traeger will not be joining us today, but Michael Bishop from, oh gosh, Switzerland. Munich. No, not Munich.
Switzerland, Zurich.
Zurich. There we go. Gosh, Mike, I knew that all the time.
I know,
So,
I know.
hey, let me answer a question for me. Here's a good question. Okay, like Michael here in the United States, a lot of times people go by, they shorten it, and it's just like a nickname, and they say Mike. Do they do that in Europe also?
Ah, yeah, they do.
Okay, but you prefer to be called Michael, right?
Yeah, especially if we have Mike Traeger on the on the
Okay,
line.
excellent. So, hey, the market's really exciting today. We're going to get going. Let's see, I want to remind everybody that everything we do present is for training purposes only, and that traders should always paper trade any new method prior to the risk of their own personal capital. Um, it was really quite interesting. I was sharing with Michael. Let me get through this. And this week I had a really good session. It turns out it was on uh, it was basically on utilizing the intraday charts, the 1 hour charts, or the 30-minute charts to pinpoint some entries and all that kind of stuff, and to apply the active trend trading rules to the intraday charts. And hopefully that those were on the premium members who were on that training session were able to apply some of that with what's going on in the market right now. I know that I did, and have got some really nice trades going on right now. And next week, we'll be talking about the secrets of the pre-market charts. We're going to get a little bit deeper into that and what you can be seeing, what you can take away from the pre-markets, like this morning's pre-market. Yes, the Dow was down close to 200 points, 150 to 200 points, but we also could take a look at how was happening in the Europe stock exchange, and also what had happened overnight in the Asian market. And it's kind of interesting here lately. We've seen like we're getting snowball effects where one market affects the other market affects the other market. And we'll see if the U.S. market continues to be where it's at right now, which is down a little bit over a percent, probably about 1.3 to 1.5%, depending on which index. It'll be interesting to see how the Asian markets react to that over the weekend. Now, remember, the Asian markets will open up on Sunday night. Well, it's Monday morning for them, but Sunday evening here in the U.S. So let's go ahead here. So last week we were talking about, basically this week, guys, I took the week off waiting for the Fed. And it was very interesting to see. Part of the thing that was really surprising to some extent was how the market rallied 2 or 3 days this week in preparation for the Fed. Then the Fed makes its announcement. So it clearly was a case. We hear about it all the time. People were buying the rumor or covering their shorts, if you will. I don't know how much buying was actually going on and how much it was regular short covering, and then sell the news. Basically, it was quite interesting to watch, and I was sharing with Michael on this. It was quite interesting to watch the reaction by the street yesterday after the Fed made its announcement. Initially, it was quiet. Then some buying kicked off, and the buying went up and really started peaking. And then Janet Yellen started doing her news conference, and when she was sticking to her prepared remarks, the market was climbing. I was going, oh my goodness, look at that. It was really going. And this is the first, I never listened to the after the Fed announcement. I never typically listened to the news conference. But after she was complete with her prepared remarks, it was really mad because the market was just sitting there going like this, going, and then the announcement, it kicks up a little bit, then it goes, and then as soon as she finished her prepared remarks and they started asking her questions, the market started doing this and actually finished down. I think we're down almost 100 points yesterday. It was quite interesting from the aspect of she basically said that globally, she has global concerns, there's local concerns. She finally acknowledged the fact that the unemployment rate here in the United States of 5.1% is a bogus, well, she didn't say it was a bogus numbers, but she says, but there's this other number, and it was the underutilized or the people who just have basically stopped looking for work and are unemployed, and it's a huge number here in the U.S. And Michael, do you have those same kind of things going on over in Europe, where basically you've got an unemployment rate, but maybe it doesn't reflect the real unemployment rate?
Yeah, definitely.
Okay.
And in all countries, I mean, there are big differences. In Southern Europe, we have a huge gray labor market, where you have some friends or whatever, and you work for them. But also in the northern countries.
Okay. So my question as we move into this weekend, are we getting ready for the next leg down to go back and retest? Joe just wrote up here that stockcharts.com is predicting a retest of the summer lows. What is your prediction? Joe, I try to stay away from predictions. I could definitely see from a technical standpoint that we could get a retest back in those areas, simply because, one, if what's going on currently in the market today holds, we will have a lower high, and it's within the context of an existing downtrend. So to go back and test a previous swing low would not be a surprise. So next leg down on the S&P, and as of when I wrote this slide up, the buyers and sellers were really fighting it out on the NASDAQ. This is the NASDAQ 100 that emulates the QQQs, and you could just tell that it was battling back and forth, back and forth, back and forth. And so it is the strongest of the tracking indexes that we watch, and then the Russell 2000. Like the S&P, weaker than the NASDAQ, and the Russell may be a bellwether for us if we take if we keep an eye on it, simply because it seems to be closer to its low that it hit on August 24th, 25th time frame, where that put in that swing low. It's closer to that, so it may be a bellwether. In that if it runs down and hits that and then breaks through it, that may give us an indication of what may be in store for the other indices. And as I said, yes, outside influences this week, of course, was the Fed, the FOMC meeting, and I just make this comment, if Janet had only kept her mouth shut, we would probably be experiencing a rally today rather than what we're currently seeing. But that's okay. We have to be prepared in all areas. So let's see. Okay, here's where we were last week on the percentage of stocks above the 20-day moving average. We were down here about the 32 level, and the rally this week just took off like a rocket ship and ran up. And here's Monday, Tuesday, Wednesday, Thursday, Friday. It's quite interesting. I chatted a little bit with Mike Traeger about this a little bit earlier. Yes, we did get this move back up above the 50 level, which it had been kind of stagnated here. But it's at a new high. The market is not necessarily following suit. This was yesterday's number. Yes, that is a shooting star type candle, and we get a sell-off today. So where are we going? Are we going to basically hang up here, or was that a signal to get short the market with the possibility of plunging back down in here? If history is anything, if history says anything about it, typically the last part of September, the midsection to about the mid part of October can be very volatile and also lead to some good downsized moves. But we'll see what's going on. We'll see what's going on because, Michael, I think you were saying that after the Fed meeting, nothing changed. I mean, even if they would have raised rates, the internals of the market, still nothing has changed. that a fair statement?
Yeah, definitely, definitely.
And so,
And I think they would have looked smarter of at least announcing that next time it's really that they really increased the
yeah,
interest
yeah,
rates.
because
I mean, so I think it looks a little bit that they don't have a plan.
yes, and that's without a doubt. It was so I found it kind of funny when they said at the after Janet at the end of her discussion, she says, well, we will, raise. Oh, no, it was in the statement, and it basically said that if things change, we will raise rates before the end of the year. Well, they're running out of year. I mean, that's the bottom line. They're running out of year. And now they meet, so look for more of the same between now and the midsection of October, because that's when the Fed meets again. And then the Fed will then take off for Thanksgiving and meet at the first part of December. So anyway, interesting things. I think one of the concerns, major concerns here in the U.S. at least, is that, as I already talked about, the unemployment. Um, but at the same time, that concern about deflation or stagflation, while the price of the price of the things they measure is not going up. Matter of fact, it's stagnated below 2% as their target rate. However, the items that you and I use on a daily basis, with the exception of the little bit of give back in gasoline over the last few weeks, the prices of everything else we use, I don't know about you, but I checked my budget. Those prices have been going up. And so now, Michael, what are you going to share with us today, man?
Now I see the slide. Great.
And I'm going to switch.
Basically, I comment two questions I got from a retail customer.
Okay.
And one was crash or no crash, and the other kind of which stock market looks now most attractive.
Okay. And you have control of the mouse.
Great. And I just sorry, I just for the first question, crash or no crash. I mean, maybe it's not a good question because or a test question, because if somebody says I know it, then I don't believe him, because I mean there are different indications, and it's very hard to predict the crash, and also if you predict a crash correctly, it's not that easy to just make money out of it. So one thing, and there I really that's your topic, and there you are the expert, and I'm so much less experienced here. It's the technical analysis. I mean, we are kind of in a nowhere territory, and it's definitely not a great looking chart. Then from an investor mood, and that's really a very historical chart, you see the bears have taken over, and from a midterm perspective, that may be a good indicator, or it would be an indicator for that the market go up again. But short term, if you also look when a similar feeding happened again, it's more it says more that a crash is on the way, instead of that it's now we are back in a low risk territory. Then that's also an interesting chart on the left side from Bloomberg. You see it has been really an extraordinary year, really a year where cash has been king, especially US dollar and strong currencies like the Swiss franc. And basically you could say all assets lost compared to cash. And that's more an indication that something severe is happening, is going on, and it's not a case where there are years where we see that US stocks go down and gold goes up, or commodities go up, or you see years where emerging markets boom and the rest is down. But that everything is going down except cash, that's more 2008. In the year 2008 we had this.
Okay.
Then historical patterns, so that you overlap annual charts from this year to 2007 to 8 and 1987, all the years where we had a crash. This also looks quite negative, and the only thing what you really could say that this time it's a different story is the financial environment. I mean, also from yesterday's statement of the Fed, you see they want to keep the market going up. They want to support the market, and there are no good alternatives to stocks still in this low interest environment.
Okay. So yeah.
So yeah, I think I'd say risk off still, and the road maybe still very bumpy. If it's just the other way around and everything calms down and everything goes up, then yeah,
we shall see. Yeah,
but I really wouldn't bet on this at this current stage.
Okay, I love the chart of the S&P that you've put on here, and yes, the current patterns that are going on with the S&P are looking very reminiscent to the stock chart patterns back in 2007 going into 2008. And everybody remember, topping is a process where bottoming tends to be a little bit more event driven, but it's looking, it's not exact, it never is exactly the same picture, but it certainly is reminiscent of 2007, 2008, 2000, 1987, just similar type patterns of what's taken place. Because as you can see, I'm going to take the mouse just for a second, is during this big upswing back here from, this is probably 15, 14, 13.
3 years.
So 2013, this trend line here, not trend line, but the moving average, look how that's maintained that moving average and was totally respected. But now we've gotten this breakdown from a flattening, rounding top, and what are we doing? We're bouncing right back up to it, but now the role of the moving average has reversed and now may be becoming resistance rather than support. And also its trajectory has changed. Good slide. Okay.
Okay, thank you. And the next one, I think that's a quick one. If we, and he just grabbed out a couple of Western markets, the US, UK, European Community, and Switzerland. As mentioned before, US market, it's in a I think difficult territory.
Yeah.
And the European markets, technically they look better. So there most patterns look like the new buttons have been retested, and it could quite rapidly go up. But on the other side, I think we are really in high risk setups, because if that doesn't happen and the markets typically, especially the European markets, they follow the US market much more than the Asian markets do. So this could also be a downside correction, and then we are technically in the same situation as the US.
Okay.
I mean, fundamentally, Europe looks quite good, especially the big companies. They are very. If you pick up the very global companies, then they are doing well, and they are just cheaper than the comparable US companies. If you take pharmaceutical companies or chemical companies, energy companies, then or the big also the European Walmarts, etc. They look better, but I think it's not a good time to enter the market now, because the risks are just too clearly. You can too clearly see the risks. And I mean, Switzerland, I don't know how many of these participants are now from Europe. Can we make a little survey?
Sure. I'll let me. So if you're calling in today from Europe, can you please raise your hand? Got about 17 folks online. So right now nobody's raising their hand, but that doesn't mean that they're not from there, because sometimes, what was the cue?
Okay.
Okay.
Well, also the blog was not included in a major mailing today. Maybe that's
okay.
But anyway, so maybe I should emphasize on Switzerland. Not now, but I have a clear opinion that it's a very difficult market, and in many times it's overpriced, just because the label secure market, safe market Switzerland, and we have the one big index is the SMI. There are a lot of ETFs also there are also some available on the US markets. And the problem with that, it's basically an index where Roche, Nestle, and Novartis are so big that it's no diversification, and it's more a bet on a global environment instead of a bet on Switzerland. And there is one little ETF, I think, not available in the US. That's SMIM. That's the medium-sized companies like the Russell, you could say, and that's much more. That gives a much better picture about the average Swiss company. But it's not too big. It's not too liquid. But in my opinion, that's the best way to play Switzerland. And there are many smaller niche companies where you should have a lot of knowledge, and you need a lot of knowledge about different industries, etc. So there are really much easier ways to make money.
Cool. So now, what's that last statement there? But yeah, I was looking at that. What's that last statement there about enjoy the negative 0.75 interest rate?
I mean, that's a problem. Especially as an international investor, currently you get negative interest rates on Swiss francs accounts.
So that means you have to pay the government a premium to own Swiss francs. Is that what that means?
That's exactly what it means. Yeah.
Wow.
And the big online brokers, they charge it to the customers.
Hmm.
Swiss retail banks currently don't charge it, but they indirectly charge it by fees and administration fees. Yeah.
It's amazing. So I see Michael next week. Now, when you say Robo Advisors, um, when you say Robo Advisors, what are you talking about specifically for a potential topic next week?
Well, there are more and more offers, and in Switzerland, and I think in the US, there are much more. I have been on the presentation of one of them, and I think it sucks, to be honest. No, really, I think they do a fundamental error, and they have one big advantage, that's cost. But if you once a while prepare a little Excel sheet, then you can then you can do the same as these robots can, and then you're more flexible.
So what exactly does a Robo Advisor do?
That's a very good question, and I think there's a lot of marketing going on, and dependent whom you ask, you will get different answers.
Okay, I mean, is it kind of like you ask advice about, or you have a website that you go to, you plug in a stock ticker, and it spits out a bunch of, regurgitates just a bunch of standard fundamental analysis type stuff automatically, and then gives you a recommendation? Is that how it works?
Well, not really. So what I have seen. So what I have seen and tested is really that you, for instance, you say every month I can, or let's say once a year I invest $10,000, and they ask you some questions, and dependent from the questions, they think you are mid-risk profile, meaning 60% stocks, 30%
I got it.
bonds, 10% commodities, and the whole magic about this is that they invested in 3 different ETFs for you.
Okay, I got it. Yeah, one of our members just came online and said basically that it's a portfolio. It's kind of a portfolio recommendation service, but it's at low cost. So yeah, that sounds like it would be interesting as a topic next week. It's online wealth management, if you will. So. Okay, Michael, and let's see, I got a couple of questions. Somebody asked a little bit earlier, on your chart, the previous chart, let me go back to that. Do you know what this moving average is? And is this a weekly or a monthly chart?
The small one is a 10.
Okay, the one up here.
Yeah.
Okay.
And the others, it says it's a 200 days average, but
okay.
No, it's not. It's definitely not.
Okay, is this chart a weekly chart or a monthly chart?
It's a weekly chart.
Okay, cool.
Or even a daily chart. I mean, you can pick it up online. I mean, that's S&P 500, so that's really no magic. Okay,
now they were just asking about you. They wanted to know about your setup. So cool. Thank you, man. That was really good. So basically, if I'm to understand that right now, almost globally, I would say, is that the risk of a longer term type investment, like a buy and hold type of investment, may be very much higher than the potential reward. Yes.
Yeah, I think especially in the short to mid-term range.
Okay.
I mean, what's going long term is very difficult to predict, and also maybe no real help, because the question would be, what does this mean in real terms?
Right.
And there are, I think, so many macroeconomic question marks that I think it's no big use.
Okay.
This forecast.
Excellent. So thank you, Michael. Let's get going here with as of 9 o'clock this morning. There, let me give you a clue on what's going on. And basically, the indexes are down. The NASDAQ is also down, but for the year, the NASDAQ is up about 3.25%. Compared to last week, the market has made a little improvement, especially the NASDAQ itself. The Russell a little bit, it's up about 2% from where it was last week at this time. The S&P, I'm really watching that, folks. I'm watching the S&P. It may be a good choice for going with the puts to the downside. I do not trade the inverse index ETFs simply because the way they make those up, it's just too much of a it is too much of a risk, because they tend to lose value even if the S&P just stays flat or goes down a little bit. So here's what we're looking at. Yes, we get the reversal. Earlier this week, we were actually all the indexes were still down for the year, but over the last day or so, since yesterday, we've gone back and added, gone back down about 1.5% on all. Jonathan asked a question, if today's session is a good time for it, could you discuss how your methods apply or not to volatilities, ETF, ETNs, and then the VIX? And yeah, Jonathan, that would be a better question for the Wednesday evening sessions when we're doing our regular training sessions. But yeah, I do take, we do offer triggers for index ETFs, and also I do take the volatility into consideration, especially with some of the option trades where either buying and or selling the premium there. So let's take a look at the market and see what she is doing. And get rid of those. So on the S&P, yesterday we get this wonderful shooting star on a daily chart. This is a daily, this is a weekly over here. And one of the things I've been talking about earlier in the week on our Wednesday night sessions is how even with this upswing with the S&P, the momentum just was not coming into play. And as we made this new high, look at this absence of momentum. It was just basically moving higher, but the internals were telling us that, something's going on here. So yesterday, yesterday afternoon after the Fed announcement, we ran all the way up, hit the 50, dropped back down. Now we have a shooting star, which could turn into actually a morning star-like pattern, because we've already dropped through, covered this candle here, and we're halfway down this candle here. So what's holding us up right now? Just, basically this support that's offered here by the uptrending support line, and then we've got a line of support here about 1960. If we, in fact, close below this 1960 level, the retest down in this area would not surprise me at all to get all the way back down to the lows from last week. Like we did on Wednesday night, I'm going to draw in it was really remarkable how well these fib retracements did work. So here's a fib retracement from this year's high. And as you can see, it pushed all the way up just past the 50 or past the 50%, but inside this magic fib box between the 61.8% and 38.2%, the 1/3 to 2/3 retracement, and now we're falling out the down backside of that. And did I say something other than evening star? Sorry, David. Yeah, this is an evening star type formation. So once we've closed below this 38.2%, it increases the probability substantially that we will, in fact, go back for a complete retracement here, and maybe even a little bit lower than that, especially if we're going into a more significant correction. Thank you, David. So that's what we got going on with the S&P. I'm going to get rid of this really quick. Let's take another look at what's going on here. Not really an uptrend per se, other than an uptrend of lows. And this candlestick here on a weekly basis, yeah, I'm not going to say it's a shooting star, but it's definitely not a bullish signal. It's a shooting star. It's an inverted hammer type candlestick, which is indicative that buyers took us up, and then bam, it's taken us right back down past the support, past the low that from the breakdown on, this is the week of the 24th of August, and so we're back down below those levels. So the 1866, I think, is a pretty good target. Let's see, NDX. NDX, again, similar type pattern. Shooting star, and then shooting star being fulfilled today. It also has an uptrending support line, and also some support here at the 42.85 level. We'll see if we get there. The S&P, the NASDAQ was looking a little bit stronger, and that's one thing that's really great. The individual indexes have been showing us where the levels of support and resistance are, and so we'll see if we get continued selling into the end of the day, which will be that's good, what's going to be critical, because if we continue to sell off just a little bit and we break this uptrend line here, that could be indicative of more selling to join us next week. Similar type pattern on the weekly charts. And so just real quick, let me go up here. Okay, this line is this is the 200-day move. No. Let me recalibrate myself here. Yeah, this is a 200-day moving average. This is the 100-day moving average. You see the 50-day, which is the yellow line, has broken the 100, has not yet broken the 200-day moving average to start, which would be indicative of a death cross. Take a look at the Russell. Okay, perfect. A really good example of an evening star. Shooting star yesterday, followed up by another candlestick that is engulfing more than half of this candle in the preceding day. Like the other indices, it's almost like we could do a ditto, give one indices, and then just say basically they're all looking very similar. We're getting a rollover on the true strength indicator. The momentum is kind of staying put. And it was very interesting to watch as this is making this big up move here. The momentum was actually dropping off a little bit. That was what was giving me some concerns. What are we going on a weekly basis? Still, no momentum on a weekly basis. of any significance. The true strength has turned up a little bit, but oftentimes what can happen in a bottoming type of motion, if the TSI is below the zero line, it's considered that the market is in a downtrend. And what can happen, this can bounce around down here and go all the way up to the zero line occasionally and stay down below the zero line for quite some time. What we'll be looking for a potential buying signal, let's say we do move all the way back down here into the midsection of October. We can see that happening. And if we get a positive divergence here, that may be a signal somewhere in this area here that the market is going to go into its end of year rally, if it's going to do an end of year rally this year. So that's what we've got going on those indices. Any questions? Yeah, David says that buy and hold from 2000 to 2011 was like the lost decade, and I agree on that. Michael, you got any comments on the indices?
No, not really.
Okay.
Yeah, I think what's quite astonishing is that the characteristics differ. I mean, the Nasdaq really looks different than, or looks much stronger than the broad market.
Yes,
so trend following could still work.
Yes, without a doubt. And it kind of takes, if you are an index ETF trader, take a look at the three of those. I do not trade the diamond just because it's one thing that I just keep off my plate. But I will trade the Qs, which emulates the Nasdaq 100, the IWM, which emulates the Russell and the spiders, and I also trade the leverage index ETFs for each one of those. And like I said, the spiders look like they may be weakening. The S&P looks like it may be weakening a little bit more at a faster rate than the other indices. And so I'll be keeping my eye on those for the spiders for potential downside trades. That means buying puts on those for the shorter term swing trades that last 1, 2, 3, 3 days, 5 days, 2 weeks as max. As most of you know, I did place a trade, and I'm holding the 2017 Spider 210 puts that I have been selling premium against that, with the anticipation that with the expectations or the thought that if we do go into a global type of depression, recession, correction of some of significant magnitude, owning those index in the Spider puts that expired January 2017, I can be collecting income on a weekly basis, but also there would be a substantial increase in the value of that. So here's where we're sitting with the trades as of September 18th. Been a challenging year. And then with the active trend trading system, our motto is, of course, to clarify, simplify, multiply. I follow the 5 pillars of a good trading system, which tells us what to trade. We trade top quality IBD growth stocks, either up or down, in index ETFs, when to enter, when to exit, what strategy we'll be using, and what to expect. I have basically placed on top of the active trend trading system, because the system is what should drive your strategies and not the other way around. Stocks and index ETFs and basic options, trade those, but also wealth building, income generation. Given the way the market has been reacting, I'm going to be allocating some assets from this area here, some capital from these areas here over into here, and trying to set some trades up on Tesla, because the premium on Teslas on a weekly basis is significant. And speaking of that,
just one comment on the index trading. A lot of trading is currently going on TLT, and it's a little bit, or it's a good alternative to stock indices.
That's correct.
That's very liquid, and the patterns are not really related.
TLT, and then it has an. Is that the inverse or is that the?
No. That's the 20-year treasuries.
Okay.
Long.
So
very liquid, a lot of options.
And it has weekly options also. Yeah, TLT and TBT. I was trying to think of the TBT. TBT is the inverse.
No, TBT is an ugly one.
Yeah.
There you have rollover losses.
Yeah. I would stay away from that one.
Yeah.
But TLT, yeah. And here's an example of the trades I've been doing with the wealth and income generating trade. And basically, it is just I purchased, as an example, I purchased a call on the IWM, the 123 calls, and it's almost worthless right now. But I keep trading and paying, buying premium again or selling premium against this particular call, and it will expire the mid part of January. And right now it has jumped. It basically I've collected this amount, and these are scalable because this just reflects one contract, but they're scalable as high as you want to go. But for the basic initial investment of $7.60, the running return on that is 80%. But the thing about it is now my on this option that I hold, my cost basis is $1.48. And so if I keep doing this week after week until until the mid part of January in 2016, I will have more than paid for this, and then also have a nice return. So for this week, no strategy. Well, we tried a strategy one trade this morning, trying to go short AMBA, no shares available, so we flipped that over into a strategy of buying the contracts October AMBA 70s, the puts, 460. My first target is 595. Wealth and income, we've generated, even with all the fluctuation in the market this week, we generated about $175 of premium on that. And right now we're waiting for a trigger on the early warning alert system. So for those who are interested, or if you listen to the recording of this, if you are watching this, we do offer a discounted membership to both the active trend trading and the early warning alert system. And if you go to this website down here, you can take advantage of that. So, Michael, I went through my archives, and because I got a couple of emails from a couple of folks this week said, the aspect of being patient is just, kind of driving them nuts. And but as you can see, the two of the greatest qualities to have in life are patience and wisdom. We can see with our buddy here, there are times to act and there's times to just stand back and watch. And the market has been basically providing us opportunities to do a little bit of both of late. So that's it for me this week. We'll take a look at some stocks if you guys would like to. See you next week. Have a great weekend. Keep the egg growing and keep it protected. Michael, thank you for joining us from Switzerland.
Yes, welcome.
And so if there's are there any questions before we start looking at some stocks? Okay, well, the floor is open. If Evelyn wants to look at Apple. There we go. Like many of the other stocks today, this is both a daily over here on the left and a weekly on the right. Like many of the stocks today, there was a gap down and then there was an effort to refill the gap. So this is kind of the conflict I was watching on the NASDAQ between the buyers and sellers. In that the sell-off reaction yesterday, then a drop below the moving averages today, but then it gapped all the way down. Here's where it opened, and it's filled the gap, but is it going to roll back over and actually fall off? And we're going to have to just watch that through the day. If you are, I don't know if you are long this or looking to get long, but if you're looking to get long, we need to get some sustained movement back up here above the 50. Now, if this drops back down to here, where the moving averages follow it down, let's say back to the 105 level, then it gives enough leeway between 105 and say 115 for a potential trade. Because oftentimes what will happen is you'll get the first plunge down, positive reversal, pull back up to the 50, pull back, and then if it's going to rally, it will go from there. So on Apple right now, I would be either looking to short Apple. Matter of fact, Apple was on my short list last night, and it is in a shorting position. It's lost the 8-day, and if it drops back, so anywhere from where it's at, with a stop back up above the 116 level from a short perspective. Netflix. Michael, you got any stocks for us today?
Not really, but Apple, I was just really kind of falling off the cliffs.
Yes.
Because I did not watch it in the last 3 days because I had some really nice trades going on there, and I sold. I think I picked really the absolute ideal time frame.
Awesome. Now you're an option trader too, right?
Yeah.
Okay.
Yeah. So I like options more and more. So I really considering to concentrate only on options anymore. But let's see.
So let's see what we got going on with Netflix. Netflix is in a downtrend. Like the rest of the market, had its one big, fell soup where this was kind of a one-day reversal, popped back up above the moving averages, and it has now dropped back below the 50 and the 100 and 200-day moving average. It is, where's it going to go from here? Like a lot of the other stocks that are out there right now, is what has happened is that it basically had this is a spinning top doji type of candlestick on the daily chart, which is a mark of indecision. It went up and hit this level of resistance at both the moving averages and this downtrending line. Today we get a gap down, fill the gap, and now is in the process of figuring out which way is it going to go from here. So if we get a total move back down below the 8-day moving average and a close below it, that would be an indication that we're heading on back down. But it could just hammer around here up against this trend line here and taking its cue from what the market's going to do. Hold on a second, guys. I'm trying to check a position. Okay, it's good. Because that's one thing that's fun about doing this during live market is I'm sitting there watching other watching positions. Okay, is that going to be okay? Lending tree on a daily chart. Yeah, you got a big pop up. It's done a little bit of a box kind of pattern where it's come in, dropped straight down out of the sky. Let me put on the put the volume on. There we go. So we get some big selling. That's the big spike down here. And then since then we get a spike up. But did we get a spike up in volume 4 days ago? No, we did not. Did not get above the average volume line. And now we're back up right at the top of the moving average channel here. This is a 10% move. And now it's going sideways. Now it doesn't, if the market participates, we could see a move all the way back up here to 138 to 140. But we're definitely going to see some volume. And right now it's looking more like this may turn out to be a TSI squeeze, which it's hit resistance, and so the path of least resistance may be down the other way. So, and let's see what else. DXCM. Now, DXCM I am not familiar with. What is DXCM? Okay. I'm not familiar with it. Its volume is over 500,000 per day. I would need to do a stock checkup on this, but it too it has done a breakout, which is good. However, though, if the market's failing and this breakout fails, that may be the first indication that this is heading back down to the downside. Again, good spike up on the breakout. And it held up pretty good with the market sell-off yesterday, but now we're getting a retest. It's all going to be market determinant on what it's going to be doing. What do we have going on here on this? We've got a negative divergence going on in the TSI. Make a new high. It didn't. And a little bit of divergence on the momentum. Price action made a new high. It didn't. And what do we got going on over here? Yeah, we've got some definite divergence going on in the weekly momentum also. Did it come out with a new finding or something like that, Jonathan, that would have potentially been the catalyst for this breakout? Okay, cool. So, okay, folks, if there aren't... here's an interesting, which it was starting to be interesting. Alaska Air is trying to figure out what it wants to do. I mean, with low fuel and low fuel costs and all that kind of stuff, it has been in a really nice rally. But keep your eye on it because the weeklies on it are looking weak, are looking like they want to fall back down. And so keep your eyes on it. And it has definitely, we have a good top up here at 82. It has a nice sell-off back down to 78, and it's got some room to the downside. So we may be looking at a little bit of a double topping type process on a daily basis. And if this candle does remain in effect here, we would have a bearish engulfing on a weekly chart. Let's see, can you please go back to see what's going on there? Sure. So keep an eye on that one. The other one that we actually did a, let me find it, AMBA. AMBA, what, some people say, well, why did you do that stock trade on AMBA today? Well, one, it's in a very significant downtrend. And then secondly, it had pushed on up. It had a nice little trend line going here. And so breaking down past the 8 was an indication that we may be going at least down to retest here. And so that's why we wanted to have a short position in on AMBA. G-Pro was also, it's the cousin of, and I could have probably shorted this one this morning because it did have shares to short. And so SPX. Okay. SPX is continuing to fall. So let's see where it goes from here. It looks like it's set up to go down and retest. Looks pretty good to the downside. Did that answer your question, Juanita? Nike. Cool. Nike. Nike has earnings coming up on 9/24, which is next week. So this may have been a pre-earnings run. And so right now, if I was, I'm not in Nike, so I would be waiting until after earnings to see what's going on with that. And it's definitely has put in, you definitely know where strong resistance is. And we know where strong support is down here, about the 109 level. Jorge, did that answer your question? Let's see, today, second day reversing, will that be early warning? Will that be an early warning signal? I would say, okay, I would say with earnings coming up, it could do anything. I mean, it may pull back to the 50 and then bounce from there. Nike's done fairly well, better than Indus. It came back up and hit its previous highs. And one more, and then we're going to call it a day. ITB. Oh, home construction. Okay. Well, if we were listening to Janet Yellen yesterday, she said, no, I'm just kidding. And so, isn't it Excel? On this particular ETF, the range of this is not one that excites me because it's quite small. Because from here to here is, because even from here to here, it's 11%. But you look at a lot of the other, there may be something better to trade out there, and so it is at resistance, if you will. And on a weekly basis, it's looking like it wants to fall back over, and it is having a hard time. Still long tails on these candles. That means that sellers are coming into this. Is it the XLB? Does anybody know what the XLB's? No, maybe that's biotech. There is a spider sector fund that's also for home builders, and I since I don't really watch the individual sectors, I let the sectors come to me. I don't other than what I find XHB. That's what I thought. And look at that. It's more or less kind of at least a somewhat similar type of pattern. But look, sellers came in yesterday, tried to push it up, and we've got things rolling over here. So for the year, I mean, you've got good support down here at 35, additional support down here at the 33 level, and it peaked 4 weeks ago, and it looks like it's retested that and maybe getting ready to sell off. Thanks, Richard. I appreciate that. Hey, everybody. Michael, thanks for joining today. I look forward to the Robo Advisors session next week.
Yes, so do I.
And so, guys, have a really great weekend. We'll get this recording processed, and it'll be online after a bit. Remember, trade wisely, trade profitably. God bless. Have a great weekend, everybody. Bye, Michael.
Yeah, thank you. Bye. See you next week.